Hey guys, welcome back to the channel. In this video, I'm going to go over how much distributions I made from my high yield portfolio and go over some market news. As always, don't forget to smash that like button and share this video if you like this type of content so the algo gods know that I'm here. Hit subscribe if you're new so you're alerted every time I publish a new video about stocks, investing, finance, and news. But before I get started, I have to hit you with a quick disclaimer. None of this is financial advice and you should always consult a licensed professional. With that out of the way, guys, let's get into the video. All right, so we're going to hop over to the portfolio. You guys can see for the week, I got cooked, right? I am down 5.9%. I'm actually down much more than that, but I'll cover that in just a second. For the day, we ended actually in the green, all right? And this was basically based on news that, Secretary of Treasury Scott Bessent was going to be speaking with his counterpart in China to hopefully come to some conclusion about these U.S. trade tensions with China. So we'll see what comes of that. Of course, this is always that typical, bad news on a Friday, good news on a Sunday or over the weekend. So we'll see what comes of that. Hopefully we can have a great green day on Monday and good things have come from this conversation. All right. But I do want to share something. All right. I shared this with my community because I want to show you guys that, yes, this portfolio is not impervious to any type of drawdowns or, I'm also in the fight with you guys, when these things happen, when these large sell-offs happen. And my portfolio was not spared from the sell-off, all right? So for the week, I was actually down about 15.36%. Obviously, it recovered, because of today. We had a little bit of a recovery. So we'll see how this turns out next week on Monday. All right. But during these periods, right, during these sell-offs, I think it's very important that investors use this as an opportunity or look at this as an opportunity. I certainly did. All right. So for today, because everything was going on this week was really choppy, there's a lot of dip buying. So what I did was go out and buy the dip. All right. So these were my purchases for the week. All right. I purchased 76 shares of MSTW, 76 shares of NVDW, 67 shares of PLTW, 92 shares of XPAY, 288 shares of WPAY, 124 shares of IBIT, and 13 shares of VGT. As I mentioned in my previous videos, I want to continue adding more to my core positions. So that's what I'm doing. The core positions are XPAY, WPAY, and VGT. I mean, IBIT can almost be a part of that, but it's a little too volatile in my opinion. But we also had, I sprinkled a little bit between PLTW, NVDW, MSTW, but not HOOW. All right. So I'm going to go into all of that here in just a second. So for today's video, we're going to be covering the distributions from PLTW, NVDW, HOOW, WPAY, and of course, MSTW. Our first one up is going to be WPAY. You guys know I like to use snowball analytics because I like to be fully transparent. A lot of you guys have a lot of questions most of the time. How much is in this position? How many shares do you have? Is there NAV erosion, etc.? So snowball analytics gives you all of that. All right, gives you all the metrics that you guys love and care about. So for WPAY, as you guys can see, it had a pullback, right? It obviously had a pullback. It is still beating the S&P 500 by a pretty decent margin. All right, so hopefully once the market recover and hopefully on Monday, hopefully next week we get a nice recovery. WPAY will recover along with that. So for my metrics, I have 1,639 shares of this. All right, I am down in capital gains. All right, share price, I am down 4.1%, but I'm only down in total return 2.7%. Again, I got my first distribution from WPAY, so that helped offset some of the capital losses. All right, so for this week, for October 15th, I was paid $1,239 in dividend distributions from this ETF. So this was a really, really nice payout. Now for the Roundhill Palantir WeeklyPay ETF, all right, again, this one is still doing really, really well. All right. Compared to the S&P 500, this one is still doing well. I couldn't quite time those dang purchases correctly enough, during the drawdown. But whatever, it is what it is. It's just maybe a small couple basis points or so. But I did make some purchases for PLTWs. You guys saw. Here are my metrics. I have 1,189 shares of this ETF, and for capital gain, I am up 13.5%, but total return, I am up 24.4%. All right. So again, the dividend distribution really, really helps that. There is no, NAV erosion for this particular ETF because again, as Palantir continues to move up, this ETF will also move up in conjunction with that. Okay. So for this week, October 15th, I was given 980 in distribution, dividend distribution. So really, really nice there. All right, moving on is NVDW, which is the Roundhill NVIDIA WeeklyPay ETF. All right, so again, NVIDIA, probably one of my best performers. This one is just doing really, really well. I did, buy the dip for a couple of these, positions here, so you guys can see that. NVIDIA or NVDW is just beating the S&P 500. NVIDIA by itself is just beating the S&P 500. All right, scrolling down, you guys can see my metrics. I have 1,129 shares of this ETF, and I'm in the green at 9.5%, but for total return, I am actually up 34.5%. So again, I like to take the distributions and reallocate them to different ETFs or hold the dividend or the distribution and, tactically, buy whenever there's dips or pullbacks, or if I'm, again, opening a new position. So that is how I approach, kind of my dividend or distribution management. All right. So for this week, October 15th, NVDW paid me $828, all right, in dividend distributions. Not bad there. All right. Moving on, we have the Roundhill HOOW WeeklyPay ETF. Again, this one is a super high beta name. This will swing if the market has a minor swing, right? Like if the index moves up or down 1%, Robinhood is probably going to swing a little bit more than that, maybe a couple percentage points. But we had a really, really big drawdown. I still haven't added to this position because, again, I think it's not that it's overvalued. I just don't want to add any more to it. I'm pretty happy with where it's at. I have currently 567 shares of HOOW. As you guys can see, for total return, I am up a lot. All right. I'm up 23.1%, but for a capital gain, because of the drawdown we just had this week, I am down to 3.3%. All right. So still in the green overall. So I'm still pretty happy about that. Now for this week, for dividend distribution for October 15th, I was given 1,239. Not bad there. Moving on, we have the most unloved ETF, or probably stock linked ETF out there, the MicroStrategy WeeklyPay ETF. Now, to be fair, all right, a lot of the ETFs are down that are linked to MSTR. Okay, you have MISTI that's down, MSII that's down, MSTW that's down, MST that's down, IMST that's down. Just anything linked to MSTR is down. This is a very unloved stock. All right, I did add to it, as you guys can see. I added a little bit more to this position. I'm already heavy into MSTW, so I have to be careful how much I actually allocate to this. But here are my metrics down below. All right, so for shares, I have 1,403 shares of this ETF. For capital gain, I'm actually down 32%. All right. And because I've been getting dividend distributions, the total return is actually a little more better. All right. I'm still down 20.4% when you factor in the dividend distributions. So not bad there. Again, I'm still really bullish on MSTR. I know a lot of people are kind of losing faith in MicroStrategy, and it's totally understandable. The sentiment is super negative, but I have a whole video on why I'm bullish on not only Bitcoin, but MSTR as well. So I won't rehash that, but if you guys want to check that out, you guys can check out my previous video, my Bitcoin strategy. All right, so moving on, October 15th, this one paid out a distribution of 1,143 in dividends. So this was really, really nice. Really like this one. Again, I'm not going to use any fancy spreadsheet to add this all up. Instead, I use a very high-speed notepad. So for this week, I was given $5,432 in dividend distributions from these high yield ETFs. So really happy with that. Again, this drawdown definitely shakes the faith a little bit. You get a little scared. Things get a little spicy. But for me, I found this to be an opportunity to go out and purchase some of my favorite stocks and ETFs. So this is it for the week. Let's get into some market news. All right, first one up is the regional banks' bad loans spark concerns on Wall Street. This happened earlier in the week. We had a lot of earnings calls. Some of the regional banks that did have their earnings call did talk about some bad loans that they have, on their balance sheet. And this, in conjunction with, the U.S.-China trade tensions, sparked a major sell-off in the broader markets. And this pretty much continued all week, right? When you have regional banks start to show cracks, it starts to get really reminiscent of, the Silicon Valley bank that went under and regional bank weaknesses. You don't want that, obviously, in an economy. So this, again, just sparked a lot of fears. And we'll just talk about it real quick. So Zions Bank, Western Alliance Bank, and the investment bank Jefferies surprised investors by disclosing various bad investments on their books, sending their stocks falling sharply this week. JP Morgan Chase CEO Jamie Dimon added to the unease when he warned there might be more problems to come for banks with potentially bad loans. When you see one cockroach, there are probably more, he said. And of course, this spooked a lot of investors, and that added to the sell-off, for this week. It was kind of surprising because you also had Goldman Sachs, JP Morgan, and I think another bank, I think it was Wells Fargo, that had their earnings this week, and they all crushed their earnings. Big banks crushed their earnings. So again, I don't know why this sell-off really happened. I really think that investors were just looking for a reason to get out of the market, to sell off, and that's what caused, this just dip, this volatility this week. It was just investors looking to take profits. I mean, we did rip pretty high, and then you guys can see we just started dipping lower. And again, it's a combination of things, just people getting scared, people getting spooked. Banks going under is a big reason to be spooked. But not only that, U.S. trade tensions with China sparking back up, that's never good, especially when it comes to tariff stuff. So all of this was just a recipe for a sell-off. But again, none of the big companies, at least I'm investing into, the Palantirs, NVIDIAs, the Robinhoods, nothing is going wrong with them fundamentally. So I'm still very bullish on all of my holdings. All right, so moving on, Trump dropped this news. All right, Trump says 100% tariffs on top of really everything else that we're already putting on tariffs for China. So in addition to on China, not sustainable, but he still plans to meet with President Xi for, hopefully to resolve all these issues. All right, so U.S. President Donald Trump said he proposed 100% tariffs on goods from China, but he also said that would not be sustainable, but blamed Beijing for the latest impasse in trade talks that began with Chinese authorities tightening controls over rare earth exports. And we're going to be talking about these rare earth exports in just a moment. Okay, so moving on, the new trade actions were Trump's reactions to China dramatically expanding its export controls on rare earth elements. China dominates the market for such elements, which are essential to tech manufacturing. Okay, tech manufacturing in the United States, it goes way further than that. You're talking defense, all right? You're talking tech for defense, missiles, computers, manufacturing. I did not realize how important rare earths are to just the broader market. Trump also confirmed he would meet with Chinese President Xi Jinping in 2 weeks in South Korea, a meeting the U.S. president had cast doubt on last week and expressed admiration for the Chinese leader. He said in a tweet that he's a great leader. He doesn't want, China to go into a depression, et cetera, that kind of stuff. But we had some really good news, all right? U.S. Treasury Secretary Scott Bessent at the White House event said he would speak with his counterpart, Chinese Vice Premier He Lifeng, later on Friday to discuss ongoing trade negotiations between the two countries. So, Secretary of Treasury Scott Bessent, probably, more, I want to say he's the calmer of the two, probably the calmest one in that whole administration. Trump will say a lot of stuff, but, really Scott Bessent is the voice of reason. So I always like when he comes to do damage control because it usually ends very favorably. All right. So, Scott Bessent went on to say, I think that things have de-escalated. Bessent said, we hope that China will show the respect that we have shown them. And I am confident that President Trump, because of his relationship with President Xi, will be able to get things back on a good course. Okay. And we just had some breaking news come out. Bank Shop Bobo, shout out to you. He just posted this in the Discord. I caught it before I started filming this video. But from First Guac on X, China Vice Premier and U.S. Treasury Secretary held sincere, thorough, and positive talks, according to the news outlet Xinhua, I think. All right, so good news. I think this is going to be really good for the markets on Monday. So again, congratulations to anyone who was able to buy the dip or able to pick up some more shares of their favorite stocks and ETFs. What the heck is rare earths and why are they so important? All right, China's rare earth restriction could disrupt the U.S. defense industry and reignite a trade war. All right, the U.S. defense, there's a lot of priority for U.S. defense, U.S. national security. Rare earths is super important for missiles, computers, manufacturing, chips, everything. It's important for everything, even copper. We're building out massive data centers. You need a lot of copper for the wiring, right? It's not just going to be all fiber. So again, a lot of these rare earths are super, super important. Now, I want to give a quick shout out to the Victor Crooks, okay? He is a member in my Discord community, and he is a commodities expert. I just want to say that he has changed so many minds, so many perspectives in the community on how we should look at not just gold or silver, but every other type of metal, because you can't have computers without a lot of these other metals, right? So it was actually really, really important. But I did an interview with him. All right. This was about a month ago. This was September 2nd is when this video was released. And he kind of went into it. So again, shout out to Victor Crooks for this interview. And again, being just a valuable member in the Discord community. If you guys want to join that Discord community, all right, get that kind of insight. I have some links here. You guys can check me out on X or social, Blossom Social. But here, if you want to connect and get that Discord link, you guys can check out this link right here. All right. That goes to my website. You can sign up, etc. So anyways, outside of that, just a little quick plug there. But yeah, just again, Victor, shout out to you, man. Really appreciate everything. So this was a very important thing. During this dip, money market funds saw some action. Okay, some of you guys might remember that I spoke about that there is $7.4 trillion sitting in money market accounts. Okay, just sitting, waiting for something. This is very bullish, right? Because if that money is sitting there, anytime we have a pullback or a massive dip or a sell-off, money will be deployed from these money market funds. All right. And we definitely saw that October 16th. All right. And this is coming from the ICI. So total money market fund assets decreased by $17.75 billion to $7.37 trillion for the week ending Wednesday, October 15th. All right. The Investment Company Institute reported today. So again, that is very, very important to know, is that there's still 7.3 trillion sitting on the sidelines. So if we do have these pullbacks, these sell-offs, you know, I would not be surprised if all this money that's sitting on the sideline goes in. This is also part of the reason why Tom Lee always says that this is the most hated V-shaped rally or V-shaped recovery, because there's so many people that put their money into money market funds waiting for a bigger, much more severe correction or crash that just didn't happen. Retail investors, you and I, we came in and bought up that dip and made the stock market where it is today, right? Just buying the dips, you know, adding to our positions. And yeah, so anyways, just wanted to cover that part because I think that is very, very important to know, especially going forward as we move into the next year, okay? All right, so just real quick, because I like to cover this. This is the S&P 500 seasonality chart. We got through September, and now we're obviously here in October. Now, you guys can see October is usually kind of like a down month. It kind of trades flat. Right now, according to historical data, there is a 55% chance that we will have a gain. And usually in October, it's about, 0.8%. All right. So not a whole lot, but November, we can see that there's a 75% chance for at least a 2.3% gain. All right. Or a return. So very bullish again, going into the rest of this year, usually from November all the way up until about April or May. That is when the stock market usually trends higher. All right. And this is all based on historical data. You guys can check this out yourself. This is the S&P 500 index seasonality chart. I like to reference it, especially during these times when there's huge sell-offs. All right. So anyways, guys, hope you enjoyed the video. Hope you enjoyed this episode. I got nothing for you guys. As always, enjoy the weekend. Get off Finance Tube. Go out, touch some grass, have a beer, barbecue, go to a restaurant, have a nice dinner. All right. I will see you guys Monday in the next video. Take care.